SEBI has released new regulations for investing in bonds through online bond platforms. But before we take a dive into that, let's first understand what a bond is. So what exactly is a bond? Let us take a look. A bond is essentially a loan that you as an investor give to the government or the company. In return, the issuer pays you a regular interest, which is called a coupon. And when the bond matures, they return your original investment to you, which is called the face value. So you can buy a bond either directly or through a secondary market. Let us first take a look at how we can buy a bond directly. Take this bond, for example. It has a face value of rupees 1000 and a 5% annual coupon rate. That means the bond pays rupees 50 each year as interest.
So I will explain to you about the secondary market. Once bonds are issued in the primary market, they can be bought and sold in the secondary market as well. Think of platforms like National Stock Exchange or Bombay Stock Exchange. Just like buying and selling a stock, bonds can also be traded after their initial issue, giving you more flexibility. Bonds can also be sold and bought through over-the-counter marketplace where buyers and sellers transact directly.
Now let us talk about bond yield, which is basically the return that you can expect to earn from holding the bond to its maturity.
Here's an example. Face value rupees 1000, coupon rate 5%, coupon payment rupees 50 annually, which is basically 5% of 1000 rupees. Maturity period 5 years. So for 5 years you will receive rupees 50 each year, totaling rupees 250 in coupon payments. At the end of the 5 years, you'll also get back the face value of rupees 1000.
But why does it happen that sometimes you can buy a bond at a discounted price from a secondary market? Well, let's take the same example. If the market interest rates rise, then the newly issued bonds will offer a higher coupon payment rate as compared to the older ones, and the older ones with lower rates, they will trade at a discounted price. So even if you paid rupees 950, you will still receive 50 rupees annually in the form of the coupon payment, and at face value you will receive rupees 1000, effectively making your yield higher than 5%. So where can we buy bonds? Online bond platforms are transforming the way retail investors access bonds. These platforms offer simple, user-friendly interfaces that can allow you to buy bonds directly, no broker needed. Remember in the beginning of the video I mentioned SEBI's new regulations? Well, SEBI has prohibited online bond platforms from offering unlisted bonds to retail investors, ensuring greater reliability and transparency in bonds available for trading.
SEBI has also reduced the minimum face value of privately placed listed bonds from rupees 1 lakh to rupees 10,000. This change is designed to make the bond market more accessible to small investors, encouraging more retail participation.
So do your due diligence in ensuring whether the platform is registered and genuine. With these new regulations, online bond platforms in India are set for a surge in retail participations. So it's easier than ever to start investing in bonds.